Then we can shift gears a little bit and we can talk about CPI and PPI and how they're showing this warm inflationary scenario, right? So our January Consumer Price Index, or CPI, showed a monthly increase of 0.5%, exceeding expectations of 0.3%, resulting in a year-over-year inflation rate of about 3%, right? That's up from 2.9% December of last year. So initially, markets reacted negatively to the data, suggesting that the Federal Reserve may maintain their neutral stance slightly longer, but recovered by the end of the trading week, since that data was released. The January Producer Price Index, or PPI, rose 0.4% for the month and 3.5% year over year, surpassing estimates 0.3% and 3.2%, which is a hotter, than expected reading. So positive factors in PPI data release were seen as likely to positively influence then upcoming data release of our core personal consumption expenditures, or our PCE index. The next part of that February summary, right, is our core PCE offers positive data. We love some positivity, right? So markets needed some soothing or something to grab onto on that last trading day of the month. And they got just that in the form of core PCE. Data showed a 0.3% monthly rise and a 2.6% annual rise, both in line with expectations and a step down from the previous month's upwardly revised reading of 2.9%. Now, the last piece of inflationary data in February, and the Fed's favorite measure, mind you, was the lowest reading in 7 months. This data was a solid way to finish the month. So let's talk about the Fed's outlook, right? The Federal Reserve. There was no Fed meeting in February, but we did get the minutes from the January meeting. Minutes showed concerns over potential impacts of upcoming tariffs on inflation, which we are now starting to see. Now, the inflation part, it's definitely going to be a little bit of a lag behind the tariffs and how long those tariffs stay in place. As a result, though, the tone was one of rate cuts being on